Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to shift gears this week away from the methodology and dig deep into psychology. So we're going to jump right into mind to trade and specifically the tools for trading in life. And we'll pick up on the methodology obviously next week and weeks beyond that. Housekeeping, I do take requests, makes my job a lot easier. Just tell me what you want me to cover and I'll be happy to cover it. If I can't fit it into this particular show, I do a weekly show every week, which is still live, and that's at davelander.com/webinar. Register even if the link is old. I need to fix that one day. Anyway, if you want the slides for this presentation and all the other presentations combined, davelander.com/StockCharts. If you need to reach me, davelander.com/contact, or you can find me on Twitter at tfollowingmoron.com. Also on YouTube at Dave Landry, one word. Okay, so for mind to trade, I want to talk about the tools for traders. Maybe scratch the surface there, and there's a lot there, as you'll see. Marcy tends to watch a lot of television, and she brings me along for the ride at night, usually. And I don't mind that much. We usually get into a series and binge watch and really enjoy it. But a lot of times, obviously, especially nowadays, a lot of these things are negative, murders and drug cartels and so on and so forth. And usually about an hour before bed, we like to try to put something positive in our head or try to find something funny or maybe a little bit lighter than mass murders or whatever the case may be. And by accident, we stumble across Stutz. And initially, we thought it would be a little pretentious because you've got this successful actor who makes a lot of money and he's talking to his psychiatrist. Oh, look at me. And it's like, well, I don't know about that, but I figured let's give it a shot. And to my surprise, I really enjoyed it. And I immediately looked him up and bought his book, which is pretty good. I'm only about 20 pages in. I actually jumped to the tool that I want to talk about in a few minutes, jumped ahead. But what struck me was how this relates to trading. And Marcy was next to me like, wow, like she was like how this relates to life. And she saw herself in some of these situations and these tools could help her in life. And I got to thinking right before I began recording that in addition to trading, if you improved your life, or if this book or other books like it could help you to improve your life, then that would also improve your trading. As I often say, your trading tends to influence your life, and your life tends to influence your trading. As I've said many times before, I used to have a detached office, a little guest house that I worked out of. And now I have an office that's attached to the house, but there's only one way in and one way out. And you have to physically leave the house to come here and then vice versa. And I did that by design, sort of like leaving work and going home and such. Well, a lot of times I go home, so to speak, for breakfast. And my wife, she works outside of the house, but only when she has work. She owns her own company. And she's been home a lot lately based on where interest rates are and the changes in the economy. And if I'm in a bad mood and go home, it seems like inevitably she'll hit me with something like, oh, we need to do this tuition payment for my daughter. Or, hey, looks like the insurance company is going to cover the tree that fell on the house after the hurricane. Or we've got this problem and the contractor says it's not his problem, so it's our expense. Some sort of problem that just kind of exacerbates me, my mood, I should say. So I'm kind of like the hammer, and then everything is a nail, so it puts me in a worse mood. And as you would imagine, there's a potential for a negative feedback loop when that occurs. So I come back in the office feeling like I have to make this money that's needed, or if I could make some money, maybe that would improve my mood. And I am not detached from the trading like I need to be. So the point I'm trying to make here is that if you can improve things with your life, it's definitely going to improve your trading. Now, getting back to trading, one of the tools that they used for life, obviously, is the choice. And you have two choices. You could choose the freedom to go on with life, or you could choose to be trapped in the past. And being trapped in the past is known as the maze. And if you make the choice to have freedom to go on with life, that's considered outflow. And I'll explain that in just 1 minute. Now, we all tend to get trapped in the maze in life. And it's easier to point out others who are trapped in the maze than yourself. But believe me, we all are. And as I was putting together this presentation, I thought about a situation that I replay way too many times in my mind. Something stupid, but somebody physically hurt me like way back in high school. And sometimes I fantasize about revenge on that. And I'm sure he's not in prison. I mean, I'm sure he's in prison, but I'm sure he's not in his prison cell thinking about me. Anyway, so I certainly need to let that go. I certainly have my own problems. I'm not holier than thou. But it's always easier to look at somebody else's problems or see when somebody's trapped in the maze. And Marcy and I visited her parents a couple of years ago, and one of her mom's friends was there. And she was telling a story about this injustice that happened to her. And I don't remember the whole story. My eyes were beginning to glaze over after about 20 minutes. But from what I could understand, they hired somebody younger than her, and it's almost like they were trying to push her out of the company. And she explained that in a very dramatic fashion, she pulls her key out of a pocket and she holds it up in dramatic pause, and then she puts it on the counter and slowly slides it over, and she walks out of the office, and how there's no way they're ever going to recover from her quitting. And I felt kind of sorry for her. And after she left, I looked at Marcy. I'm like, well, what is she going to do for a job? And Marcy's like, what do you mean? It's like, well, she's at least your mom's age, and her mom is 80 now. So I'm guessing she was probably 78 or 77 when she was telling the story. It's like, I thought she was retired. I didn't realize she was still working. And Marcy looked at me like I pooed my pants and said, she hasn't worked in 30 years. That was over 30 years ago. And I'm like, oh, so this woman, every day of her life, or every time she sees someone new or sees somebody again and forgets she tells a story, she relives this maze that she's stuck into. So what started out with me thinking, okay, this is great for trading, it's also great for life. And again, if you can improve your life, your trading will also improve. Now, how do you get stuck in the maze? Well, it's pretty easy. Do nothing. A lot of times it'll put you in the maze. And for instance, let's say you're winging it as opposed to making a plan. I never could understand why people wing it in trading, although I occasionally do it. But I never could understand in general when I lay out a plan in my trading service and everybody tends to wing it. It's like, well, wait a minute. I did all the heavy lifting for you. Here's the plan. Not that it's the grand poobah. And as you saw last week, we're doing okay this year. We're not setting the world on fire, but as I've said ad nauseum, anything positive in the bear market is fantastic. And maybe I'm setting my sights too low, but I've been through a few of these, and I know it's not that easy. But anyway, the reason people wing it instead of following a plan, creating a plan and following, is one, it's a little work to create the plan. And two, it's a lot of work to follow it. And I think my epiphany was the moment you create a plan, in that plan, you have to admit that you could be wrong on any trade, no matter how great it looks. And we're not good at being wrong. Larry Williams' son wrote a book, The Mental Edge of Trading. And the gist of the book is get to know yourself and get to know your personality and use that as it relates to trading. And I found out that I scored about a 0% in agreeableness. And I thought this was some big old epiphany for me. And I went in the house and announced the news to my wife and daughters, who were all home at the time. And they all looked at me like I pooed my pants. So I thought I was agreeable, but evidently I'm one of the least agreeable people on earth. I don't like being wrong. Nobody likes being wrong, but I obviously have some mental issues with it, which could be the absolute worst trait for trading. Now, the other thing that'll put you into the maze is system surfing, and this is especially true with something that's new, unproven, complex, or arcane. Years ago, and there's many stories similar to this, but years ago, one sticks out in my head. I knew this trader fellow, and he was on the research side of the business. He was getting paid to do research. His brother was a money manager who he seemed to be close with, I guess still is. So he had some exposure to the trading world, and in some cases he had enough exposure, especially to the research side, to learn what works and what doesn't. And one day I called him up, and we were talking about trading, and he told me about this setup that he just entered, and I was like, well, that's pretty neat. It happened to be working out, and I'm like, oh, okay. And he's tried to explain it to me, and it seemed a little bit kind of out there, and I couldn't see where it was conceptually correct, but it seemed to be working for him at the time. And I'm like, well, how long have you been doing this? He says, oh, I just read about it this morning. I'm like, oh, God. If you find something that you think is pretty cool, whether it's from somebody else or me, you need to play devil's advocate, and you need to find 100 examples. Find when it works and find when it doesn't work, and that's even more important. Find when it doesn't work, right? Wrap your head around it, maybe paper trade it for a while, trade it with real dollars in a small fashion. Make sure you understand it, understand the nuances, good, bad, and indifferent. For my stuff, or trend trading in general, you're going to spend a lot of time less wealthy. You're giving up open profits, and you're waiting a lot, and waiting a lot, and waiting a lot, and finally you knock it out the park. Well, most people aren't that patient. So you need to fully wrap your head around what you're doing. And along those lines of system surfing, you need to be super careful if it's something that's complex or arcane. I would never throw anybody under the bus, but I know that millions of dollars have been thrown at things such as Elliott Wave, and they were unable to figure it out. Now, a big problem is confusing the issue with facts. What is, and spoiler alert, that's pretty much what outflow is. What is. I was once speaking in New York. Here's a classic Dave Landry story. I was speaking at Traders Expo doing one of the half-a-day sessions, and I was showing my transitional patterns, bow ties and first thrust and things like that, with the oil stocks, and I explained that I was bearish on the oil stocks, and here's my positions, and here's some things I recommended. And in the middle of my speech, somebody shouted out, and he sounded like Henry Kissinger, "What about the situation in Nigeria?" And I'm like, I was a little taken back, and then I caught my breath, and I said, "What about the situation in Nigeria?" And he explained what's going on with OPEC or whatever, basically the situation in Nigeria, which would drive oil prices higher. Well, fortunately, for this example's purposes, oil continued lower, and the oil stocks continued lower, and if memory serves, we at least got our initial profit target out, and we were able to ride that trend for a while. So here's a gentleman who was there to learn technical analysis, but he refused to short energy stocks because of the situation in Nigeria. And many people often confuse the issue with facts when it comes to markets. They think this stock should do this, or this company has the best whatever phone or whatever, and they want to invest in that. Well, unless price confirms what your beliefs are, then you have to learn what is. Is the price going up, or is the price going down? Or is it just going sideways? Micromanaging is a big one. I've done complete presentations just on that. You get into stock, and your stop is 2 points away. Stock immediately goes against you. You bail out, and it keeps dropping. You feel pretty good about that, and you come in the next day and it's up 10 points. Or you take a really small profit because you think that's all you're going to get, which is a little tricky, and I'll get to that in 1 second. But let's say you got an initial profit target of 3 points, and the stock is up about 50 cents, and it just can't seem to get moving, and all of a sudden you're like, you know what, I'm just going to take that profit. Now, we're talking micromanaging on position trades here versus an intraday trade, which is a little bit different, but you can micromanage those too. But micromanaging is probably one of the biggest sins that I see when it comes to trading, and that's why I spend so much time on that, and that's not following the plan. Now, I often talk about discretion, and with discretion is breaking the plan, just as micromanagement is. And a lot of people are like, well, Dave, you say you don't micromanage, but you did this or this or whatever. Well, discretion is basically using your brain to improve upon the plan, to make the methodology work better, not to try to beat the methodology, which that's micromanaging. Micromanaging is trying to outsmart the market. Discretion is seeing what the market is doing and making some sort of plan to adjust to that. For instance, let's say you're in a stock and it gaps through your stop and you have a loss. Well, you might be able to, instead of just bailing out, and this is a little bit more advanced and it takes a little more discipline, obviously, but you might be able to hang on for a minute because you already have that loss and see if the stock immediately begins to reverse. And if it does, then you can put in a new stop below the low of the day and then possibly ride it out and get out at a much better level. And if the stock just goes crazy and straight back up, you might actually be able to keep the position. Another form of discretion would be, let's say a stock gets really close to your initial profit target. Let's say you're up $2.90, you're looking for $3. You know, that might be close enough. If it just can't seem to break through, then you take half your shares off. That's fine. There's nothing wrong with that. In fact, I actually encourage that once you have a little bit of discipline and experience. Recreational trading, or trading for action. As I've said 1,000 times before, many years ago, I had a trading service I still have the trading service. By accident, I got into retail. That's a long story in and of itself. But I accidentally got into retail and had a trading service. And back then, we were one of the first websites for traders. It was us and Market Watch, and that's the only two that I can remember going way back. I'm sure I'm leaving somebody out, but there wasn't a whole lot of websites for traders. Every Tom, Dick, and Harry didn't have a website. Anyway, the Trade Hard, which became Trading Markets, had a sales force which would sell my service. And whenever there wasn't anything to do, I would recommend doing nothing. If I'm not going to put capital into harm's way, then why should I recommend my clients do that? Well, the salespeople will call me up and say, Dave, you got to recommend something, anything. And the reason was, if I recommended crappy stocks, as I occasionally do, I don't do that on purpose, but sometimes it works out that way. And there's been a few lately, admittedly. But if I recommended crappy stocks, they would lose a few clients, but not that many. If I didn't recommend doing anything because it was time to just sit it out and wait for the conditions to improve, the customers would drop like flies. So that told me right there that these people were craving action. Chasing rabbits. You've got to be really careful not to try to buy everything that moves out there. You've got to be especially careful to not just try to buy something because it's going straight up, some sort of hot meme stock or whatever. Back during the pandemic, I put on a whole bunch of positions and my equity was moving, fortunately, in my favor. And I remember talking to somebody I'm very friendly with when it comes to trading. And we were on the phone together. I'm like, wow, my equity just had a jump. I said, I don't even know what moved. Because, well, you're chasing a lot of rabbits over there. Now, that was working for me at the time. But I did run into a lot of trouble trying to trade all these different things. So you're much better off focusing versus trying to trade everything and avoiding these completely insane stocks that are just going straight up. Now, if they're set up, that's fine. But if you're just trying to jump in the market and you're trying to catch every move, you're going to get into a lot of trouble. The definition of insanity. Now, allegedly, Einstein defines insanity as doing the same thing over and over and expecting a different outcome. And a lot of times in trading, you'll find yourself stuck in the maze doing just that. And the problem is, occasionally it will work, doing the same thing over and over, and all of a sudden, bam, you make a lot of money, and you think that you should keep doing the same thing. So you have to wake up if you're doing the same thing over and over and losing money, and realize that maybe I'm not doing the right thing. And one thing that happens to a lot of people, no matter how long you've been in this business, is you get a little confident and borderline cocky because everything is working so well and conditions begin to change. And then all of a sudden you think, oh, I'm going to keep doing that. But it was working so well, or the 6 most dangerous words on Wall Street. Not honoring stops. Now, earlier I mentioned discretion. Discretion is, okay, my stop is at, let's say my stop's at 15 and the stock goes to 14.95 and then it rallies back above 15 and then keeps rallying. Okay, well, I'm going to put a stop below today's low, and if I get stopped out, I get stopped out. That's using a little discretion. That's not throwing caution to the wind. If you allow a stock to blow through your stop and keep on going, then obviously you're not honoring your stops. And one story comes to mind here. Very early in my career, I became friendly with someone, and I assumed that he was absolutely printing money. We would share stocks with each other, and I believe he was on my trading service at the time. So we were looking at a lot of the same stocks, and he was printing money, I was printing money. This is back in the late 90s. And then as the market became more and more crazy, just going straight up, I remember one day I had one of my best days ever, and he happened to call, and was talking about all these great stocks, and I'm like, how you doing? You must be doing great. And he's like, oh no, I'm nursing a lot of positions. So that tells me that he didn't honor his stops, and he had a lot of positions on, and he was hoping and praying that they'd come back. And kind of makes me think about what's the line from the Fockers? I didn't know stocks had nipples. It's like you can nurse anything with nipples, right? Fear is a big one, and I think we could talk forever about fear, but Douglas summed it up the best. Mark Douglas, the late great Mark Douglas. And paraphrasing him, he said, what you fear in the markets, it's not the markets themselves. And kind of based on this, I've done a few presentations where I talked about the bear market in cocoa. Cocoa lost like 60% of its value a few years back, and I put the chart up, and I asked the audience, anybody stressed out about this move and was stressed out about this move in cocoa? And so far, nobody's raised their hand. Eventually, I'm sure I'll reach a cocoa trader out there that was stressed out about the move. But the bottom line is, cocoa, for most of us, who cares? What difference does that make? So there's no fear in cocoa or any other market, for that matter. It's the fear of you're not being able to do what you need to do when you need to do it. So if you're picking really good stocks and they check all the boxes, they're trending well, you got a bigger picture pattern working, you've got a setup, you've got an entry, you've got a stop, you've got an initial profit target. Now, easier said than done, but there shouldn't be any fear in that trade because everything is all laid out for you ahead of time. And you're also doing that planning before you're in the heat of battle. So again, you're fearing that you're not going to do the right thing, as opposed to fear in and of itself within the market. Now, repeated mistakes, I'm guilty of that. What's the old saying? A mistake repeated is no longer a mistake, it's a choice. And this business requires a lot of introspection. And believe me, every time I make a mistake, I make sure I make a note of it. I have a little digital notebook, and they just did a software update that allows me to tag things. So every time I make a mistake, I put a mistake tag, and one day I'll be brave enough to go in and look at all of my mistakes. So you got to be careful to repeat mistakes. As I often say, a trader often makes mistakes and knows he is making them. And that's actually Livermore said that. I just repeat him a lot. And sometimes we expect a lot more from the market. Now, this often applies to intraday trading, but it can apply to other forms of trading too. And that's, let's say that the market just is not moving and you've got about $100 in profits and you feel like, no, I want more than that. Or let's say you are position trading and you're looking for $1,000 for that initial profit target and you got about 900 or so. And then the market kind of keeps rolling over. And instead of taking those profits, partial profits, you expect the market to give you more. Now, what's interesting is I didn't realize the definition of outflow. Like I said, I just started reading this book. But outflow, as defined in the tools, is the force that accepts everything as it is. Amen. That's markets. So you want to trade something that's simple and conceptually correct to work your way toward the freedom to go on with life. Obviously, I've kind of touched upon this throughout. You want to wait for the best setups. And then, of course, I've kind of beat the dead horse here too. You want to make that plan and you want to follow it. Now, again, I'm just beginning to scratch the surface here. If you want the slides from this presentation, all of the presentations combined, you go to davelandry.com/StockCharts. And if you need to reach me, davelandry.com/contact. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.